Hey, this is BA and welcome to The Line. Now, I have been talking about doing this video for a couple months, so I finally had the time to sit down and do it. Let's get started. In all honesty, I figured out what George Baer was doing with the ellipses in his book Time Factors in reverse. I found it first in markets, then realized that what he was getting at. For those that have not seen my videos on George Baer, Baer was a Gann contemporary. He was a market trader and forecaster like W.D. Gann. Very important books there, and no, I don't sell them. You can find them online. Over the years that I have been trading cycles, it became evident that price responded to certain lines originating from certain highs and lows. When I began working with W.D. Gann's systems, particularly his mathematical price methods, it became clear that at price pivots, a line attaches one pivot to another. This line exists before the price action. Thus, price respects the line. This is critical to understand as it greatly aids in affirming price targets and, most importantly, sorting out price movements between pivots. As an example, let's say a high occurs at 1.2678 and a low is projected at 1.2174. What will the price action between the 2 points look like? Will it go rocketing down? Will it go sideways and then shoot down at the end? I mean, what's it going to look like? And what governs it, more importantly? The line, which is seen in many of my videos and all of my market recaps, is support and resistance. Again, it is support and resistance. This is critical to the trader to understand. Once the line is mastered, the trader can develop an intuitive feel for any day's price action. This results in a huge advantage over other traders. Here's the secret that ties it all together. The line is the major axis of the ellipse. The line is the major axis of the ellipse. So the key that is missing in the material written on the ellipses by other authors is that the ellipse is anchored at a time pivot, and the other end of the ellipse is anchored at the next time pivot. No exceptions. That means that price can be understood as moving through an ellipse generated by price time. If you are confused at this point, no need to worry. Let's take a look at an example. Make it very easy for you to see. Okay, here we're at the Euro US dollar in the year 2012, and we have a high here at July 2nd of 2012. Okay. The line is already drawn down to the projected price point. This is what it looks like in real trade. This is what it looks like in real trading from the perspective of a Gann trader. Okay. The line's already drawn down. Okay. So let's see that next bar is now in. So you would be watching this. I mean, this is what you see, okay, when you have this drawn in. So it's perfect. That price action, I can understand it during the day. On this day, it opens on the other side of it, and it cuts down. Now, that is an indication that this price has got a long ways to go. So I understand that pivot. What happens is the market makers open it up over here, and then it goes down here. Okay, so it cuts through support, and that means lower prices. Look at the next day, it opens on support or on resistance. It hits resistance and pow, it goes down. I can see. Then the next day it goes down even further. Now at this point, because it's kind of getting close to our price target, which you'll be able to see here in a minute, because it's getting so close, if I'm in options, because I trade IBM options, if I'm in options, I may want to get out at this point because that's generally where the most bang is, because this move's just about over. Okay, and that's where you start getting the sideways motion. Okay, sideways again, we have it moved up higher. It's an outside day. Why? Because it moved up higher and lower, but it didn't hit support, so it still had room to play. So what it's doing is it's honing in on its price point. Here's the next one. As you can see, it goes up to resistance, comes down. Okay. There's the next one. Opens up, goes up to resistance, comes down. Okay. A next one that cuts the bar. Okay. It opens up and goes down. What it's doing is it's honing in on this price point, and boom, we hit the price point here. Okay. So all this, it goes rocketing down. Then it starts to slow down, and there's a reason for that. And that is because it's getting closer to the price point. Okay. Now, to make this a little bit more easier to understand for you, that's what the ellipse looks like. If I would draw this in, you can see that the price action is contained within the ellipse. Okay. Very important stuff. Why did we stop going over here and start going down this way? Well, because this is where the minor axis of the ellipse was. So if we were to draw, I don't know if this would draw it right, but you can see from this point and drawing the ellipse down, we'd kind of cut this. Okay. That's what's going on there. You see that? So when you see it through that perspective, through those eyes, I mean, you guys are that are trading, you're trading against people that know a lot more stuff than this. Okay. You see what I'm saying? This is critical. So when you see that line drawn all over the place, this line that connects highs and lows, like I connect this pivot over here, which is the previous pivot up to that point. See how it respects the line there, respects the line there. This one cuts it on a crazy day, but it's honing in on that other point. Okay. That's why in trading, it is absolutely critical to have that line on, because I have these people and they always contact me and they're like, hey, on your forecast, this pivot did this or did whatever, and they're lost. And the reason is they don't know where these lines are. Okay. So they can't gauge what price is really doing. I mean, if you're expecting a low and you go rocketing down, yeah, they know those parts, but you start getting in this choppy stuff and it'll throw them off. And that's why I get all these questions on it. So what's key here is to always use those lines, and they always exist in the forecast between the pivots. Okay. Like say, if, there was a July 1 high forecast and a July 14th low forecast, which there almost was here. It was a little different, but if there was that, then, you would have, you would draw that line in, but you have to know where price is going. You absolutely have to. If you've gained insight from my video, subscribe so you can get the latest on my free market calls, updates, commentary, and teachings. In the book Tunnel Through the Air, W.D. Gann mentions elliptical or ellipses only once. He uses the word elliptical on page 76, which is the same page that he states, in making my calculations on the stock market or any future event. That's not a coincidence, okay? There's definitely more applications of it than that, but we're just going to hold it here. As you can see, knowledge is priceless. Hey, this is BA reminding you, you can succeed. Take care. Bye-bye.